PBT Nation, hope everyone had a great weekend and wanted to bring you quick market summary for the weekend. As you know, we talked about pretty much in depth on Thursday as to what the state of the union looks like for the market, and I am getting ready to send our daily newsletter. And what I wanted to really talk about is more of a market than anything else. And we saw what happened over on Friday, and what we saw on Friday was more the sell-off here in last 15 minutes. Things got really nasty on Friday, and then we closed just at the 21 period moving average. Now, I would think this should hold, and it should hold. If you take a look at it, we haven't put two lower lows in the Qs on a closing basis. We haven't put two lower low on the closing basis. Actually, maybe once, if you want to call this. We open here, we close here, but that will be the only two lower lows. We haven't put two or lower lows um, since we bottomed here, and even then, we were actually doing just fine. It was I mean, there's just the bars, the size of the bars were so huge, the moves are so huge. We never really put two consecutive red bars, red bar doji, red bar, green bar, red. So the trend kind of continues even in the rally. You don't have two consecutive red bars. You have one time here. That was the only time we saw two red bars, and then we had a little bit this is island top that's working, and it's still there for me. And I talk about how the hourly chart works for me. It's probably the most important chart as far as the trend and how the trend stays intact. And I do think the in the cues, if I were to redraw this trend line right over here. So we're right into that. So now we have three touches here. So we're right into that. So this is 2150s, and we can see 50 period moving average. Not sure if that's in the cards, the 50 period moving average market. For the longer term, it's still bullish. Our risk model has turned negative, and we talked about the risk model turning negative. What really stands out in the risk model is how the longer term signal is turning bearish. Means what's going on for longer term, like week 1 month ago we were still bullish. Now the risk model that I'm going to send out, you'll see in our risk model, that was a month ago, and it's no longer the same. And so as you all know that the risk model was turned bearish as of 620 626, 625, I'm sorry. So 625, the risk model was turned bearish. So with that said, let's take a look at, some of the key uh, eh, indices here. So you've got Qs right here. We talked about the Qs. There's nothing here Qs until we get above this area right here, and quite frankly, not till 246. I want this to run until 246, and then we'll figure out what we want to do as far as how we want to play this. So that's, for me, that's more that's most that is probably the most important area to watch for the cues. Those of you who want to play this long, I do have a couple of stocks that I still like. As far as the potential long, and let's see if they trigger, and they're going to be on their own. So let's have a look. But what I really want to talk about is the spiders. I think spiders. We can talk about the S&P. S&P is right at the trend line. This is your swing low right here. That was the last low, that significant pivot right here. That's what you call it from a technical standpoint. That's the swing low. You've made a low, and then you made new highs here, and since then we're just kind of a churning here, right? So you gap down here, big day here, big green bar, and then you're putting a sort of, not very clear, but sort of a higher low here, and then potentially lower low depends what happens tomorrow. So we'll see what happens. I don't want to get got caught too much into the minutia of uh, the candlestick and technicals. We'll see the bigger picture as it forms, and we'll let the market dictate where it wants to take us. As far as you get ready to scan your own stocks, and I'm sure you all have scanner ready to go, and I have mine, and this is how I like to scan it. Obviously, this is much cleaner look. All the algorithms and the formulas are built into TOS, and I shared the picture. So that's where it's, and I come here to give you more of update. Happy to give you TOS, but those charts are a little bit has a little bit more. Uh, they're a little bit more busier than this chart. I like when I trade. If you notice, those of you trade with me in the room, and those of you who have taken mentorship with me, I don't trade with a bunch of indicators. Now, when we build the algorithms, you have to put the formulas in to become as systematic as possible. I mean, the market is just like a friend of mine used to say, hey, if we can become ATM machines that every time you put in money, it asks you if you want a receipt. So every time you see your profits, you take. Every time you see your loss, you take. If we become that systematic, the trading becomes much easier. And more on that, I'm gonna do a five-part psychology kind of series for the members. So that's happening. I already started working on that, so that's coming soon, and we'll start posting that on members dashboard. Diamonds, definitely in trouble here, along with IWM. That's your 200-day moving average, that's your 21, and that's your 50. So that's at 250 and 250. This is your swing low on the diamonds. And if diamond breaks this area, which it looks like overnight, the futures are gyrating between 100 positive to maybe 200 negative, something like that. And I saw the big moves in the future already. But if we break this area, this is where the gap fill is, right? So we filled the gap, and then this right here, we can see the 240, but 230, around between 240 and 230, it'll put the Dow back into the bear territory. So right over here, so that will put the Dow into bear territory. It's something that we can watch and see how that will materialize, but definitely staying weak. And as far as the diamonds, what's really driving diamonds lower? Disney, Boeing, and which I never liked, right? So I mean, we loved it here. We love this base. This is those of you who's been swing trading with us for about a couple years. I love the stage ones, and this is the video that's going to be posted this week on the members section. It's straight from my swing trading course, and you'll be able to see that video, and you'll see the stage one and how profoundly it trades in the direction of desired direction if you play it right, and what really contributes to that. So it's right here, and right now Boeing offers me nothing here. And then obviously the Nike that sold off as well, so that also didn't help the the diamonds, and Apple also that sold off on Friday didn't help. But IWM, which consists of 2,000 small caps here. I mean, you need this for to have a robust economy. I've talked about this over and over again, and that's breaking the trend line, 200, 2150. So breaking this area to watch here, which is about 134. 134 gets taken out. Watch out below, and the uh, the swing low on IWM. It's quite this is a critical area in IWM, which is 120. So that's what this is a big move here. So I'm not sure if we're going to get there it's quickly, but let's see what happens. There's a lot of uncertainty right now in the market, as far as what's happening with the COVID and civil unrest that kind of spiked over the weekend, and some other social issues that we are dealing with right now. So there's a lot of uncertainty in the market. So once that subsides, I think we'll see something. Russell in a typical pullback uh, pattern here on the weekly chart. So, like I said, when you're ready to scan yours, have a daily, hourly, weekly chart, and sometimes I have a monthly chart when I'm looking for longer term. So if I want to pull a weekly chart, I'll just go. Oh, sorry about that. It's wrong chart here. Way wrong. Okay, there we go. All right, so I pull up this chart and then I'll just make this a monthly chart, and then I only need just one moving average on the monthly chart, and I'll just stick it right over here. Like, I'll make it super small because there's not much happening on the monthly chart. I just want to know the picture, bigger picture, what's happening on a monthly chart. So the reason I'm showing you this because it's more profound on the Russell. It's in a typical technical pattern. Once you have a sell-off, the first three green bars that gets to the 21 period moving average, and then you have a topping tail is a typical sell setup, means that you will sell below this bar and you put a stop above this bar. That is a typical sell setup. Now, if your time horizon is monthly chart, that's a pretty big stop, but that's also a pretty, it's going to have a pretty large profits as well, or the targets, because you're looking at, maybe right over here. So I'm not saying that that's happening. Quite frankly, I don't think that's the case. I don't. If you are if you like to trade both direction and you're a multi-directional trader, there's tons of opportunity in this market, both the stocks that are really breaking down and the stocks that are really breaking out. And I talked about, the cheap gets cheaper. Here's your CCL. CCL, same here, right? You have nice sell set up on CCL. So right over here, just like the Russell. So sell set up here and this is on the weekly. So your short will be here, stop will be here. So 20, 25, and you're already at 15. So you hit like almost 15. So did have some short covering. This is not buying. This is more for short covering. So did have a short covering on Friday. And same thing with AAL and UAL. All those Robinhood traders that got into this trade probably doubled their money, bought it again, probably bought it here again, and now they're sitting at 1238, which is right here from that base. I be honestly, I played the CCL here, and I think I talked about my losing trades more than I talked about my winning trades. I bought it here at I want to say this part or this part, I don't know, but so right here I bought it and I ended up taking a stop loss on this one. So I don't really buy the cheap stocks. Cheap gets cheaper. But look at this, it's just it is what it is. So, all these stocks, this is garbage. I don't like to touch them. So let's have a look and see how what's going on. We did take a stop on DXCM. This is something unbelievable. I actually put my stops. I walked away from the trading desk, and I saw an alert that something triggered, and I was driving. Did not see till I got to the hotel, and when I looked, and it was DXCM, and I was really, it's like WTF. I mean, something happened. There's over almost 200,000 shares traded in this 15 minutes bar, and we don't, we only trade, I don't know how many shares we trade here on this. So let's have a look here. That's so let's have a look. So right here today we traded eight about 8 million, and look at right here. Usually we trade about uh, 6 million, and today we traded. So definitely some acceleration here. So the 200,000 and a 15, it's quite a bit. So we had a quite a, we had some volatility in this name, but hey, that's why we have stops, and I got stopped out at 380, and then it rallied back to 383. It might go back up, but it's definitely going without me. This was my best trade that really, I mean, this was no doubt, it's one of the best trade, and I'm going to be I will replay this. That's what I can tell you about me. If I take a stop on a trade, does not mean that I stop watching that trade. This is a weekly play, guys. 85. I mean, maybe I tightened the stop a little bit, but I would have stopped out anyways. I mean, if I would have put a stop here right around in this area, which was 79.50, I would have stopped out. It went to 78.50. So 80, if it was going to take off 80, it's going to take a stop. It was our 5% position, not that big of a deal. Depends on if you had a $70,000 account, which we modeled, and you took a 5% loss, it's $180. So it's not the end. Hey, 880 bucks, we made much more than that. And then DXCM, which I think 180 bucks and 168 for the pizza trade. But on the good news is that Amazon, yes, Amazon, same thing, last 15 minutes sell off, but we're sitting pretty on Amazon. Our stop is about $110 away from Amazon, and that's our break even. So we've been riding Amazon really nice. Twilio broke out. We have now what 11% of this position in Twilio broke out, and this is going to continue to break out. This is really shows relative strength into the market. So we have four open position, and last one is tech, and tech is holding up well. Even though we had a nice red volume here, which would otherwise show distribution day, and again last 15 minutes, but we had our stops, but it put a bottoming tail, and now it's starting to look okay. I like when my stock does well relative to the market, and they were doing well relative to the market before I shut my tr- trading station, and then went out with the family for the weekend. But that's what happened, so it is what it is. So here are some stocks that I really like for this week. And I have I don't I think short wise we're a little too late to short anything. If you want to short, it has to be on the rallies now. And I would short the market straight up. I don't have anything that's setting up good short now. Codex, it's a COVID play. It was a COVID play. We played it here. We almost doubled our money. I know I was not in this red bar. I got out of this green bar, and then this we went higher. So we played this in a swing trading program, and we played it right into this area right here. We played it right here. We added over 15, and then that's where we took profits. Codex, I like it over 20. Keep it simple. We're gonna do let's do I'm gonna do 5% because I want to keep I'm gonna start I want to stay nimble in this market environment. You can do 10 if you like. I personally am only going to do a 5% trade. GAN, that's another one that I really like, showing relative strength to the market. This is nice right here. Hourly chart looks nice. Once that's taken out 25, you'll see a breakout coming here. I like this sand. Sand, we probably talked about in, I think it was last week video that I did. I talked about watch this sand as it was getting ready. Sand actually gapped into this buy area, which would be just like the wing stop right here. Look, we talked about the wing stop right here. This gapped into this buy area. It's now these stocks when they gap up, they're actually buyable gaps here. And then it's rallying higher. So going back to, I just wanted to show you how the patterns and what I trade, they're so similar. I mean, what I do exactly the same. I actually got an email from one of the new subscribers and says, "Hey, I've been in your program for about 3 weeks, and I see that all the trades are exactly the same." And I said, "Hey, I take that as a compliment because I don't deviate from my strategy. I've been doing the same strategies for last 10 years, and I still find uh, tons of opportunity to refine my approach and get better at it." So again, I like it over 25. I think we have good opportunity here. Here's our another open position IBB. This is we stop at 134. Stop held is strong close. Let's see what happens tomorrow on IBB. So super tight stop is going to be less than $100 loss for those that are modeling the 70,000, but all depends. So it's going to be 2.5% at the max. Now, this is the one that I like the most. It's tradable tomorrow. 88 is the number that you want to watch. 88 by 85, that would be your stop. 88 by 85, so that's your stop level. This is a weekly buy setup here, longer term. I love this. The reason I want 88, I want this area to be worked, and then you can add to this area. Those of you who like to trade more actively, this is a professional gap. We played this during in a day trading room. We played this via the day trading alert. We made good money on this AXSM, and this is another pro gap. What you look for the pro gap, do you have a downtrend here? The gap that opens up above the moving average, above the pivot. You have no resistance all the way here. So make sure understand where the resistance is, and that's exactly this from here to here. That becomes your trading range. So you have a little bit of a void, and that void becomes your trading range. So a little bit of a day trading lesson for you and how to day trade these stocks. So AXSM, put it on your watch list tomorrow. Tandem, buy trigger here, stop right here, super tight. Those of you who are active, and then that goes, and that's also getting ready to break out on the weekly chart. So big stops on the weekly chart, but I think you can play it right here on Tandem. These two kind of states eh, on their own, and gold is definitely broke out. I've talked about the gold, and I told you guys, those of you want a gold exposure, 165 is your number. It triggered 165, it came back 165, and now it's about to go. Now the only downside of gold, if gold gets to that I believe this is the level on gold. I have to go back to the monthly chart. Now understand this, what's happening with the gold. Gold is in a Gold has traded since 2013, since 2013 to all the way to, let's take it to 2020, let's 2019 at least, because 2020 almost touched this level. You have 7 years of base in gold. It didn't go anywhere. I mean, you've got about buck 30, really, right? That's where the most trading happened, between buck 30 and about, let's just call it 120. So that's what, $20. It's already put in that range, and now it's about to take it to 181. If this level gets taken out, this is going to make things really tough for the stocks, and that's exactly what's happening in IBB. IBB is breaking this 5 years of base, guys. 2015 to 2020, that's base. It just broke out. So that's what I like IBB. I love looking at the monthly chart, and when I find opportunity in a monthly chart, I tend to take those opportunities. So that's what I have for you in this newsletter. Hope you enjoy it and have a great trading week, and I'll see you guys in the market.